to be recorded.
Good to go.
All right, awesome. Hello, everybody. All right, a little bit of technical difficulties, but as always, we pull through. I'm Boris Schlossberg with BK Forex, and today I'm very, very happy to hang out with you guys with Pepperstone, one of our favorite brokers. As a matter of fact, I always say that if I wasn't an American, I'd always want to be trading with Pepperstone. And the lesson that we're going to basically hang out today and do is going to be actionable Forex strategies to trade news like a pro. I'm going to show you some of the ways that we trade news at BK Forex in our own chat room. Some of you guys, of course, are members of our chat room. We have a whole bunch of Aussies, hanging out with us. We trade 24 hours a day, pretty much. And I'm going to sort of go through not only the strategies that we employ, but I'm also going to share with you some of the resources that I use on a day-to-day basis, which hopefully will be valuable to you guys. And I'm going to see if I think I have the capability to send you guys links. So I'm going to try and do that as well. And if we can't, then I'll have Fabian send you guys links. If you like, what I'm going to do is at the end of the presentation, I'm going to PDF this presentation, and then I'll email it to Fabian. And when you guys request, obviously when we send it to you on a recording basis, we may be able to also give you the presentation itself, so you can have a look at some of the rules and some of the key points that I'm going to make as the presentation goes by. So before I begin, let me just sort of see if anybody has any questions, any problems to start with. I'm going to go through various sections, and then at each section I'll stop and I'll ask for questions. So don't worry, there'll be plenty of time for you guys to ask me questions, and then we'll ask questions at the end. I don't have any time limits on me, so we can hang out as long as we like and go through all the key points. I'll begin in just 1 second. So any specific questions anybody have pertaining to the presentation, anything else that you have on your mind right now? If not, I'll commence as we begin. Okay, all right. So, actionable Forex strategies to trade Forex like a pro. As always, trading foreign exchange on margins carries a high level of risk, may not be suitable for all investors. I ask you to read the disclaimer very carefully to understand all the risks associated with trading on margin and to seek advice from an independent financial advisor if you have any doubts. All right, I'm going to apologize ahead of time because it's wintertime. It's starting to be wintertime in New York as opposed to summertime in Sydney and Melbourne, and I am miserably sick with a cold, so I sound a little bit like a frog. So if I'm coughing a little bit through the presentation, my apologies up front. You understand why. So let's start. Why is economic data so important? Well, the most obvious reason is it moves markets. I mean, I think one of the things that people tend to forget, or perhaps new traders really don't appreciate at all, is that lines on a chart, wiggles on candles and wiggles and moving averages and Fibonacci retracement levels and all of that stuff mean less than nothing when it comes to moving prices. I know everybody wants to believe that you can make money strictly through technical analysis. And that is probably the single biggest mistake every newbie trader makes. If you are not aware of what's happening in the market, you are a sucker. You are an absolute shill. We will take all your money in days, weeks, years, doesn't matter. You need to be constantly and always informed, because news is the single most important factor that drives the market. It doesn't mean that technical analysis is not important. Let me sort of rephrase that. I know I came very, very hard off basically saying that it's less than valuable. It's great at explaining to you where the certain support and resistance points are, where the buyers and sellers are located. But buyers and sellers change their minds based upon economic data. So if you don't understand what's happening, you will not understand why you're winning or losing. Moves currencies. News moves currencies and equities. That's the bottom line. Now, excuse me, there are 3 ways that we trade news at BK. One is what we call proactively. which is very dangerous and quite a lot of fun, and actually quite difficult too. And two ways, which is reactively, and I'll show you both of those strategies as well, that are obviously less dangerous, but don't have nearly as kind of a strong payoff or payout as a proactive trade could have. So let me explain to you what proactive trading is all about. Proactive trading is essentially the ability to try to figure out whether news is going to be positive or negative ahead of time, and positioning yourself in front of that event in the hope that if your analysis is correct, the market will move significantly in your direction. So being ahead of the game has a couple of benefits. Obviously, you have lower risk in a sense that you're not hanging out for 12 hours, 15 hours in the marketplace at the whims of the marketplace. You're just positioning yourself maybe 10, 15 minutes in front of a news event. It offers instant gratification. Don't ever underestimate the value of instant gratification. Our whole American way of life is built upon instant gratification. But as traders, obviously, one of the things we really like is quick results, and nothing creates quicker results than news trading, right? And it's sort of very binary. You're either right or you're wrong. I mean, there's this incredibly beautiful clarity about it. You don't have the typical uncertainty of like, I don't know what's going on. I don't know if I'm right. I don't know if I'm wrong. I don't know if it's going to go up. I don't know if it's going to go down. That almost all other kind of trading involves, right? But it has a lot of disadvantages. It is clearly very difficult to do. I mean, if it was easy, everybody would be doing it. They'd all be billionaires. But it is very, very difficult to do. And the reason why it's difficult to do is really for two reasons. One, it's hard to predict data. And two, even if you predict data, it's not always true that the market is going to react to the data in the way that you think it will, right? Generally, yes, but not always. So you sort of have two barriers. One, you got to be correct on the data, and two, you got to be correct on the reaction. And that's what makes it such a challenge to do. Now, reactive news trading, of course, comes in after the market has come in. And generally, there are two types of information that we look at when we're doing the reactive news trading. The easiest, the most obvious, and sort of the most structured, and we do this all the time. For example, every single week, we trade what we call scheduled event, right? So, of course, this week we're going to be trading non-farm payrolls in our chat room on Friday. Scheduled data is that large, big, important events. Even, like right now, the UK PMI services event was an interesting potential trade right now. In basically about an hour and a half, we have the Bank of England coming out. That's going to be a massive event. So anything that's on a calendar, anything that you know is coming up, really gives you a nice anchor point against which you can potentially lay down some trades. So scheduled data is, of course, the cornerstone of what we do, right? And scheduled data essentially involves the following things: economic news releases, central bank meetings, and these things are nowhere near as important as they used to be. But G7, G20 meetings, sometimes these are only important when the world is in turmoil, right? And G20 Treasury auctions are also only important when the world is in turmoil. So during the Greek European crisis, we used to follow the Italian auctions and the Spanish auctions because the yields on those, whether investors decided to buy or not buy government bonds was a big tell in how currency markets would move. So these two particular things are really not that important right now. In a calm, normal market, the only thing that really matters is economic news releases and central bank meetings. But don't completely dismiss these things, because in a time of crisis, they really come back to the forefront of how the market trades. Now, the much more challenging and sometimes quite interesting story is, of course, unscheduled data. Unscheduled data is basically news. It's basically stuff that happens, stuff that breaks, right? And the most common unscheduled data that will either make you money or just trip you up in the most frustrating way possible is comments from central bankers and fiscal authorities, right? Just right now, as a matter of fact, let me see if I can pull up my chart. So you guys see my chart, right? let me show you something really interesting of a prime example of unscheduled data. I'm going to go on a 1 minute chart for the last just 6 hours. Look at this. You could be sitting pretty nice and quiet at the beginning of the European Open. Boom, boom, boom. Look at this. This is a 1 minute chart. You had like a 30, 40 point move on a 1 minute chart. What was this? This was, I forget which one of the UK fiscal officials, but he said, oh no, the guy who actually negotiated the terms of Article 50, which is the article which would trigger Britain out of the European Union, which would trigger Brexit, basically saying, hey, even if they trigger Article 50, they can still renegotiate after they trigger it, right? And that's obviously viewed as pound positive. So the guy says this on the wires, and you can see the prices just jump right up. Now, if you had some kind of a technical formation that you were trading that was short, you certainly would have been stopped out right away instantaneously on this, and you wouldn't have even figured out why it happened. What's interesting about unscheduled data, of course, is to figure out whether it's meaningful or not. In this case, clearly this was just a flash in the pan. This wasn't a situation where, now, let me sort of rephrase this. At, what is it, 10 o'clock? It's actually very close. Like I think, so what is that? That's going to be GMT, 10 GMT is going to be in about 12 minutes. We're actually, while we do this webinar, we'll keep an eye on cable because I think in 12 minutes, there's going to be a ruling by the UK courts that will say whether they have to vote, whether the Parliament has to vote on this, or whether Prime Minister May can just simply go ahead with Brexit without the parliamentary approval. If the courts rule that Parliament must approve, you're going to see cable soar. It could go 100 points. Now, if that is a positive ruling, that's actually a ruling where you want to get long cable on the news, because that's something that very likely is going to have more meaningful upside. The reason why is because there's almost zero chance that the Parliament would approve Brexit, because the lawmakers are not idiots. They understand the calamity that would involve. So sort of the best hopes of all of the non-Brexit people in UK rests on the idea that the courts will stymie the whole, popular voice idea. And you can see right now sort of cable is really starting to pop up in anticipation of all of this. This is a perfect example of sort of like quasi-scheduled news that could have very, very meaningful impact as we work on it. The other, of course, big things that have impact are M&A fixings and activity. And the fixing activity is essentially 1600. It's actually 1630 GMT right now, which is when London closes. And London is the center of all FX activity. So usually you're going to see a lot of movement up and down. We actually, in my BK room, have a special strategy that does nothing but trade fixing activity. Where this is the end of the day when the London markets close, there's a lot of movement in currencies, and they have impact on the move. Upgrades and downgrades, rating agencies, of course, have an impact, and God forbid, we're always vulnerable, susceptible to geopolitical events. So if something bad and terrible happens, we're going to get reactions, and most likely in front of the yen. So the best free scheduled data website, sort of what I consider to be the best calendar. There's actually a couple, and I'll be happy to email you the links at the end of the presentation. But Forex Factory is perfectly fine. Forex Live has a perfectly good calendar, economic calendar that you like. I actually like the Forex Live calendar quite a lot, and it's quite good. Forex Factory is sort of the simplest and easiest one to use. And if you want, this is a super good tool. If you want Bloomberg-like accuracy, what I mean is instantaneous G10 news releases. This little applet, which is totally free, all it requires is for you to register, to use your email address. And I use, I'm sure a lot of you probably do this. I have a garbage Yahoo address for which I whenever I need to sign up for anything, I always use my Yahoo address. And it's fine. All you do is you give me your personal address, and as a result, you're going to get literally just as fast as Bloomberg releases of all the various economic data. This is right now, for example, we just had the positive UK PMI services come out 54.5, up 2.5 points. So that's a great little widget. It saves you lots and lots of money, and it's super fast and it's super reliable. Now, for non-scheduled data, sort of the constant running commentary, what I absolutely love is this website called Financial Juice. Again, you can use your garbage email address to log in so that you don't get spammed a lot. But what these guys do, which is really, really good, and if I were to log in here, let me just sort of show you. Oops. So, and I'm not gonna let these guys talk, but they have a function called Voice Squawk, and it's basically three British guys or three guys out of UK who sit around 24 hours a day and do nothing but tell you, hey, this is what the news release is coming up. Hey, this is what somebody said on the wires. Hey, this is the latest breaking news. They have every news outlet in front of them. They have every Reuters, Bloomberg machine, everything you can possibly imagine in front of them. And all they do all day long is just simply talk. Now, you may find that annoying, or you could find it very soothing, depending on how you go about it. But if you ever want to sort of find out why things are moving, this is the first place you want to go to. Again, cheap man's Bloomberg. So I'm going to actually mute them. But as I said, we got about, like 7 minutes for the UK ruling. It should be really interesting to see see what happens. So those are sort of the best resources for everybody to follow. That I went through. A couple of these are our Twitter handles, and we're pretty active on Twitter. If you guys want to follow us, Kathy Lien FX and FX Flow, which is FX Flow is me obviously, and Kathy Lien is Kathy Lien's FX. Those are really, really good Twitter handles to follow. And then a couple of other good Twitter handles like Forex Live, Reuters. And these are the guys that I showed you, Live Squawk. They also have a great Twitter handle. I'm always, of course, I'm always using Twitter screen as a quick way to find out what's happening in the news. But frankly, the single best color, the single best instantaneous color of what's happening is these guys at Live Squawk that I just showed you, going through the Financial Juice website. So that gives you, I think, a very, very good basket of tools that you can use to become completely informed about all the news sources. Let me just kind of stop here for a second and ask Fabian if anybody has any specific questions about anything I said. I'm happy to send you all the links. I will send the links to Fabian, and then when you guys get the video of this presentation, you'll have all the resources inside there. So is there any other questions that they may be having there?
Not at the moment, Boris. There's some coming through, but they're not finished yet.
Okay, great, super. So hopefully everybody's clear about all the various news sources that you can use. And these are, as I said, every single news source that I've just given you is totally free, which is what makes it so cool. All right, so now let's talk a little bit about trading, right? And let's talk about how we can trade data. Keeping my eye, by the way, we're going to keep my eye on this UK news, because while it's happening, it should be quite interesting. And maybe I'll have some ideas for you of how I would trade it. If I, trust me, I would be trading live right now, but I just don't want to get everybody confused about it. But I'll certainly make suggestions if the news is significant. Anyways, proactive versus reactive news, right? Why should I bother predicting data? Well, because proactive provides some very, very interesting opportunity, and it could helpfully avoid some potentially bad trades, right? If you want to understand what's tradable, this is a great list. Literally, I think this is just about the sort of, if you're a newbie trader or even a sort of a intermediate type of trader in FX, there's nothing better than this list to orient you as to what matters. This is what matters, right? This really is what matters on a day-to-day basis. Now, there's other things that matter. You obviously have geopolitical events. We have the U.S. election right now. But on a day-to-day basis, when the world is just functioning as an economic unit, this is the order of priority. Meetings, minutes, speeches, employment reports, retail sales, this is the exact order of how things work and what moves the markets, right? The two countries where none of this matters is Japan and Switzerland. So we never trade any Japanese or Swiss data, and that's because both Japan and Switzerland at this point are what's known as safe haven currencies. They have negative interest rates. Let me sort of explain to you why this matters. All of this matters is because ultimately currencies are valued upon their yield, right? As everybody in Australia should know, because of course you have one of the best yields in the G11 universe. So the higher the yield, the higher the currency, the lower the yield, the lower the currency. I mean, the classic example of that was when you guys were booming. After 2008, you were the only country that was booming in the Western world because of all that tremendous supply to China. So your central bank was the only central bank that was actually raising rates in the 2008 environment. And to this day, I remember Aussies, when Aussie was 110 to the dollar, I remember New York City literally being chock full of Australians, where you guys were just buying suitcases worth of stuff because it was so cheap and easy for you to do so. Well, move back 4 or 5 years, and things have slowed down considerably. The RBA has cut rates significantly. Where's the Aussie? The Aussie is trading 75 instead of $1.10. Excuse me. And obviously, that is the reason why. So all of these things are inputs to the interest rate. Interest rate is before the release. Interest rate. By the way, that's a little audio cue. That's from that little applet that I showed you, the instant news applet. 1 minute before the release, it gives you like an audio cue, so you can hear it. It's on my other computer. I just wanted to let you know. So these are the 10 of the most market-moving releases. We ignore Japan. We ignore Switzerland. So as I said, these are the key things of trading proactively. But the most important way of slicing the proactive strategy is what we call Tier 1 versus Tier 2 data. So what is Tier 1 data? What we try to do, and this is very, very important, we try to avoid U.S. non-farm payrolls because no matter how
10 seconds before the release,
no matter how well you can handicap that report, the reaction. Remember I said to you there's two things that are very important. It's the value of the news release and the market reaction. The market reaction to non-farm payrolls can be so incredibly unpredictable and so volatile in the first 30, 40 seconds of the trade that we just generally tend to not stand in front of it. Similarly with bank rate decisions, because you can never really predict what the central bank is going to do. It's a soft prediction. There's no hard number generally against it. So we try to stand away from central bank decisions. Again, very, very volatile events. These are too volatile to trade. But retail sales, PPI numbers, employment numbers for Australia, something I'm going to show you how we do, is done all the time, and it's really, really cool, very relatively straightforward. So how do we predict economic data? What we do is we try to look for clues in prior releases. So one example, Australian employment report, right? We believe that it was going to be stronger. Why do we think that is stronger? Because we look at the Australian PMIs. AIG, the Australian Industry Group, issues a services PMI, a construction PMI, and a manufacturing PMI. And within that, they have an employment component, right? And if the employment component, generally our rule of thumb is, if employment rises in all three PMIs, we have a high degree of confidence that the Australian employment data is going to beat, right? If the employment falls in all three components, we have a high degree of confidence that the employment is going to miss. If it's a mixed picture, we tend to sort of stand back. So occasionally when all three things are flashing red or all three things are flashing green, we'll take a trade in front of the Australian employment. And the way we do that Again, my apologies for coughing. We enter into the trade about 20 minutes before a major news release, right? Right over here, right? And as you can see, in that particular case, all the PMIs were positive. About 20 minutes, you can see the markets are very, very quiet, and then the news is released, and boom, in 5 minutes, you have a chance to make some very, very serious dough. It goes from 77 to about 77.80, right? Very, very strong. We place our stops at 20 to 30 pips. Now, I will warn you right up front. If you trade this, under no conditions should you be confident that you're only going to lose 25, 30 pips. If you happen to be completely wrong and the market moves totally against you, there's nothing you can do. There's no liquidity, and you're going to get stopped out at maybe 60, 70, 80 pips away. This is why this is the danger component of this strategy, which is why I never recommend personally that anybody risk more than 1 or 2% of their capital on any given proactive trade, because you just never know. You just never know how crazy it's going to be. I'm just watching the cable. I'm just watching cable here to see if there was no ruling, if the ruling has come through or not. Cable looks like it's a little stronger, but I don't see any huge move yet. Anyways, so that's the key risk you need to understand. If you're wrong, you're gonna get clipped, as we say, very, very badly. So here's the employment report. Now, what's very cool about managing this particular trade is that when you're right, you take 20 points of profit on half the position. My apologies, guys. I told you the winter got me. So there's two ways to trade this. You can just do binary. You buy here, 20 point target, you're done. Just take all your money and walk away. Or you could see if you can milk the trade for more. So one way is you enter here, you take 20 points off on half the position, and then you manage the other half position. You move to stop the break even, obviously, and then you move the other half the position to try to see if you could make more money. Couple of rules you can set. One is 3 times risk, right? So if you risk 20 points up front as your stop, maybe the second half you put a 60-point target on it. Or if it breaks the 20-period SMA, this is a 5-minute chart. We're always trading 5-minute charts. So let's say it's obviously going to be above the 20-period SMA on a 5-minute basis, but let's say it weakens, right, and it breaks the 20-period SMA right somewhere over here, then you just simply get out of the position. There's a lot of different ways to manage it. It's up to you of how you want to do this. It really doesn't matter. Here's another good example. Canadian trade balance, right? The market is looking for -255. The prior was almost -3. Where do we look for? We look at the IBPMI, which is a PMI component of Canada, and within that component, we can find whether the employment component of that, the employment component of the IBPMI, as you can see right over here. Wait, I'm sorry. No, here's the IBPMI. I'm sorry, not the employment component. We see that the IBPMI, which is their manufacturing PMI, was better, which means that the trade is likely going to be better. So in this particular case, no, I'm terribly sorry. I'm terribly sorry. I'm looking at all the wrong stuff. We see that it was worse, right? Prior was 62. The market was looking at 56. It actually comes out worse, right? It's bad Canada. I always get confused with Canada because inverse trade. So the number comes in much worse, which means it's positive dollar Canada. So we go long dollar Canada in front of the trade, and obviously you can see a nice tight pop, 27.30 to about 40 points right up on the trade. Another great event to trade is U.S. ISM non-manufacturing. That's essentially services. Non-manufacturing stands for services. Where do you get the clue for how services could look like? Well, you look at the manufacturing component. If the manufacturing is stronger, it's likely the service is going to be stronger too. So we look at the manufacturing number. In this case, it was weaker. Oh, no, I'm sorry. In this case, it was stronger. The survey was 53.2. Actually, was a little bit better than the survey, which means that you have a chance to get long in front of something like dollar yen. Now, do these leading indicators work 100% of the time? Of course they don't. I mean, if they worked 100% of the time, we would never have to work for a living. But they do work close to 70 to 80% of the time, generally, at least at very minimum in terms of direction. They will tell you it's very likely that the number that the market is expecting is going to be better or worse than what the market expects if you put together these clues ahead of time, right? It doesn't tell you whether the price action is going to actually react, right? So for that reason, there's, as I said, a lot of interesting instant binary satisfaction out of proactive trading, but I personally don't do any of it. I personally do only reactive trading. And the reason why is because the market is huge. Prices do not adjust instantly. And it looks like I'm just curious. I'm sorry. This is such interesting news. Let's see if did the UK issue before is pure issue of law and is justifiable. Government accepts that a withdrawal can't be conditional on withdrawal, so rights would inevitably be lost by withdrawal. Normally, treaty powers are a matter for government does not have the prerogative to give notice. That's the clincher. The government loses the case. Oh my God! This is huge. This is huge. Yes, this is huge for cable. Yes, that means they gotta go. They gotta go. Let's go look at this. Look at cable. Cable's starting to spike. So this is a 1 minute chart. I would definitely be a buyer here. I mean, you have to trade very wide stops here, but I think ultimately this is positive cable for more than just a minute because the government loses the case. This forces the government to actually, I think, go to Parliament. The market is obviously clearly was anticipating a lot of this stuff, so it was front running this. But well, maybe there's more news coming out. But generally, this should be relatively positive. Where would I put my stop here if I was trading? I would put it like around. Probably around 2,300. I mean, you really have to get that wide in this particular when it's this kind of crazy news. You kind of got to get wide on that basis. But that is big news, and I think it should be positive. So I would be long here. I mean, I'm almost tempted to trade myself, but I will restrain myself. So let's just imagine we're long somewhere around 2380, right? And I would target at least 2,400 first as my first target for half a position, and then let the rest of it float, because I think we could go to 25. I think this is news that could ultimately move cable up to 2,500, but you do have to give this a lot of time to adjust. This is pretty interesting and kind of fascinating news. So you can see how news really does move markets, right? There's going to be more stuff coming out, so I'm a little cautious about getting super bullish because maybe there's an out for how the government vows. But this is, I mean, it made perfect sense to me legally. There's no way that they could simply do Brexit without a parliamentary vote. The question now is whether they're going to have enough votes in Parliament to just invoke Brexit hardcore. But that is just such a fact. I mean, it's so interesting for us that in the midst of all of this, this is happening. Although it doesn't seem to be holding as well as I thought it would be. Okay, so anyways, just for argument's sake, academically, we're long somewhere around the 2380 region. We're going to have a stop all the way down to 2300 because we're just going to let this go. One of the things that I do, by the way, this is sort of interesting on just my own account, is it's very difficult to be accurate on your first entry when you're trading this kind of dynamic news flow. So I'm always leave a little bit of money in reserve, and if this thing comes back down to somewhere around 2350, I'll be buying my second lot. But right now the market is just trying to absorb and stabilize and figure out just how much of an impact this has on cable. And there's obviously a lot of two-way market action. So right now, I'm just happy to hold a virtual long position 2380, and we'll see how that plays out over the next half hour that we're hanging out here together. Okay, so that's kind of cool. Where am I? So reactive. I mean, this is right now we're seeing a live version of prices do not adjust normally, reactively. So what makes reactive trading so compelling? There's no guessing of data. There's limited exposure to market risk. But the key thing to reactive trading is patience and to be conservative, right? The strategy that I'm going to show you, a reactive strategy that I'm going to show you, is not the strategy that I'm employing here, because this is a very, very special news event that I believe has continuation. This is a strategy that actually bets on the idea that there is very little continuation once the news is fully absorbed by the market. We call it the crowd fighter. And it's basically the idea of trading the news like the big banks, that trade FX. So why do big banks make money trading and news and you don't? And the reason why is because trading is hard, right? You have to guess the original number, headline risk versus underlying risk, which means that sometimes the news on a headline basis looks good, but when people look underneath the details of the news release, things are not nearly as pretty. One good example of this is Australian employment data. Australian employment data is composed of two things: full-time and part-time jobs. So when the headline number comes in, it could be very good, but when people look underneath it and see that if all the jobs were part-time and all the losses were full-time, the Australian data will actually reverse a lot of its moves. And because algos, as you can see, algorithms just obviously going to just completely and totally front-run you in the instant that it moves. And more or less, prices move pretty efficiently in the near term. So if you assume all of those things, basically, banks, what they do is they provide liquidity, meaning that they're always on the opposite side of what the customers want. So when customers want to buy, they sell, and when customers want to sell, they buy. And when you have extreme moves, that provides a little bit of profit taking. So what we try and do is, in this particular strategy, is we try to imitate what the banks do. We basically, what's called fade the action, which means we go the opposite way of the price action. If the prices rise, we're willing to be sellers. If the prices fall, we're willing to be buyers. But we use very, very specific risk control, and we trade only high impact events with exact value. This is the key thing. This is why I'm not. This is a high impact event, but it's not an exact value. There's just a lot of turbulence right now in trying to figure out what the ultimate value of cable is right now off of this rhetoric. So we never trade rhetoric, right? This is effectively rhetoric. But when we have specific values, we actually try to trade it with about as close to as one-to-one risk as possible. So let's just sort of show you how we would trade this. If we trade U.S. data and European data, we actually like to use the euro-yen as a currency of choice. You don't have to. You can use the euro or you can use dollar-yen, but euro-yen sometimes works really, really well. The cross helps to isolate the strength and the weakness of each region's data. It tends to provide a little bit better reversals, and it's also almost as liquid as the euro or the yen itself, right? Especially, and by the way, I actually need to sort of preface this. So I'm assuming that everybody who's listening to me is on the, or who's interested in trading news, is on the Pepperstone Razor account, right? That goes without saying. What I mean by this is that if you want to be trading news, which is effectively like a 10 to 20 point pip trade with a sort of a 20 point, maybe 25 point maximum stop level, you don't want to be trading anything that does not have ECN like spreads. If you're trading something that has a spread of more than 1 point, you should not be trading news because you're already at a huge disadvantage. So that's just a minor, what I would call public service announcement. Of course, everybody in my room who's on Pepperstone trades the Razor account. If you trade the full, the embedded spread account, that's fine, but just understand that you're at a massive disadvantage when you're trading news because your execution, just by the definition of the fact the spread is going to be much wider, is going to be much worse. But in the rules that we established for the crowd fighter, they're actually quite simple. All we're trying to do is make sure that from the time the news hits to the time what we call, let's say, we usually use about a 10-minute range, right? 5 minutes before, 5 minutes after. We sort of the 5 minutes when the news gets absorbed by the marketplace, right? That there is actually a reaction. It either goes up or down, and it has to go, the absolute value of that reaction should be at least 7 to 10 points. In other words, if the market gets excited and then comes back to its opening value, there is no trade. It's got to get excited and stay up, or it's got to get excited and stay down in order for us to trade. And then we trade against the direction of the move. So what we do is we put a stop of 17, target of 12, and generally the kind of events that we trade on the U.S. side would be U.S. ISM manufacturing, services. We can trade the non-farm payrolls because this is after the event, not before the event. German flash PMIs, German IFO. Those are sort of the events that we like to trade. This I think is the non-farm payrolls, right? So it comes out here. You can see the the prices spike. This is the first 10 minutes, right? We sell a euro yen at this level, right, with a 17 stop. And our target is 12, and it just it makes target very well. You see how prices come up and then come right back down very, very quickly. This is the 840 non-farm payrolls where prices dip, right? Prices dip. We buy the dip, and they pop right back up. Overall, when we ran the strategy, it was about 80% accurate. That's, of course, past results do not guarantee future performance, and take everything here with a grain of salt. But generally, these type of strategies where we are trading against data tend to be we try to shoot for a 75 to 80% accuracy on those trades, right? That's really sort of the story. The same story with Australia. With Australia, we use the Australian dollar as our choice of instrument, and the same ideas. And here you can trade the Australian retail sales, of course, the RBA rate decision, the employment data, and the I forgot what this is. It's changed its name so many times. The PMI, basically the government PMI manufacturing data out of China sometimes tends to be a big mover. And here you can see it was also relatively accurate, close to that 75% basis. The pound requires a little bit more flexibility because pound is such a funky little pair. So much volatility in the pound. So in this particular case, in the pound, we actually give ourselves 20 minutes of range. So 5 minutes before, 15 minutes after. We give it more time to absorb the news. That sort of 10-minute range is all about absorbing the news. But we use the exact same targets: a negative 17 against positive 12. And the three things that we can trade here: PMI services, retail sales, UK employment. I actually have no idea because I didn't even look because we were starting the webinar. But let's just, for fun, and today is certainly not the day where this would have a lot of impact. But let me just see. So I'm just curious because we had. Okay, so here's cable. No, sorry. I'm just trying to. I made this thing way too big. Okay, so here we go. Let me just bring this up. I just want to show you the cable chart just to see. We had UK PMI. It's a good example. It's very, very inaccurate to kind of. So it's 5:30 my time, New York time, right? Data is positive, right? We wait for 15 minutes, and obviously today would not have been a day. I would have never traded this today because we had the big decision awaiting us. But presumably, if there was no big decision, you see how prices really topped out in the first 5 minutes, and you could have just sort of traded the highs. You could have just sold around the highs to see if the prices would have come back down. It's not a super great example of this because I'll give you an interesting example actually that you guys will appreciate. This is the Kiwi dollar. This, by the way, I will talk about this in a little bit more detail just 2 days ago. So here's just bear with me. So here's the this is right here. What this is the New Zealand employment data. Much better than expected. But notice something that I think is super interesting. And this, by the way, if you walk away with nothing from this webinar except this one little insight, it will be worth it to you because this is my bread and butter trade. This is the trade that I do over and over and over and over again in BK and my own account and everywhere else. And it has to do with New Zealand and it has to do with Australia. which is that whenever you have news on these two particular currency pairs, what you will notice, this is really crowd fighter in its full glory. The prices in the first 10 minutes adjust. They go up, right? They go up. And then what happens? The banks come in and they start to take profits. They start to take profits. And see the Washington Post is breaking the news. And you see cable is starting to move to 23.90. Anybody, hey, Fabian, ask him if anybody got long cable at 23.80 with me on this trade. I'm just curious if anybody's trading it to the upside.
Yeah, we've got a few people.
All right, good for you guys. Good for you guys. As I said, if this gets to 24, just take half of it off the table, and then run the rest. We'll see if we can squeeze the rest of it out. Looks like we're going to take out 24s right now. I am. On the one hand, I love being with you guys in the room. On the other hand, I'm dying. I'm just itching to trade this myself. All right. Anyways, what I want you to see is this is the absolute classic signature of the New Zealand-Australia news trade. News comes out, market reacts, and then you have an hour and a half of just counter trend movement. And if all you do is simply go the opposite of what the market did 10 minutes after the news for New Zealand and Australia, most of the time, never all the time, never, you will get into a situation where it'll just be one-way markets. And that's why I always put like a 20-point stop above the high. So it makes, if the move if first 10 minutes makes a certain high, I get short and I'll put a 20-point stop. Similarly, if it makes a low, I will get long and I'll put a 20-point stop underneath there. Because if it's a one-way market, you're just wrong. But how many times you get this kind of movement? All the time. Why? Because the banks sold it, they need to take it back. They sold it, they need to take it back. That's really all it is. It's all it is. Because ultimately, this was a huge buy. This was a massive buy. I mean, this was really good news. But they need to take their profit. They need to make their profits back. And this little technique, this sort of little structure, is what allows you on a day trading basis to just carve out very, very high probability, low risk, 15, 20 pips out of the move. Ultimately, this was a huge move. Now you could say, well, why didn't you go just simply get long and you'd have made 100 points? You could have if you were a long-term fundamental trader. The problem is that this kind of a curve, this kind of a chart, is nowhere near an 80% chart as this kind of a chart. In other words, just like weather can be predicted with much greater a degree of accuracy 5 minutes forward than 5 days forward, I have a high degree of confidence that this is what's going to happen let's say 1 hour away from the event than I do what's going to happen 10, 12 hours away from the event. Because a million other things could have happened in that time frame that would have completely changed the parameters of the Kiwi trade. So it looks beautiful in hindsight, but it's not about what it looks like in hindsight. It's about what, look at cable. Cable is through 24s. Cable is rocking. I hope you guys are banking. Cable is starting to move. All right. So, as I said, guys, and this is just my own personal recommendations. If we were in at 23.80, half at 24 out, now you just hold the stop at 23.80, and then maybe we can make 24.50 on this. This could go higher. I actually think it could go to 25 before the story is. This is a big story, big story. Anyways, that's what I wanted to show you. It's the New Zealand-Australia fade, right? I have like 1,000 slides on this, but it's really what it boils down to. Now, it's really what it comes down to. And you can see this working on Australian employment all the time. Right, here's the example of the Australian employment, where big move up, you just sell the 5 minutes afterwards, the small correction, right? You see New Zealand trade, huge move down, you buy it, stop 20 points below for about a 10 to 20 point pop, back to the upside. These are 5 minute candles, so you have generally the rule of thumb is news, 5 minutes, reaction, give it between 20 to 45, let's say give it between half hour to an hour to react the other way. If it's not moving, just get out of the trade. Like if you couldn't make 10 points on a bounce back, then it's likely going to resume its initial trend, which is downtrend, right? But this is reactive news at its absolute classic best. New Zealand, negative news, market comes down, you're going in with the market makers, you're going in with the bankers, and you're going to buy 5 minutes afterwards, and it gives you nice 10, 15 points of pop before it essentially resumes this trade. Now you can say, so why am I doing this? Why don't I just simply trade with the fundamental news? You can. I mean, I actually think that's another great way of trading, and I think it all depends on it depends much more on the personality that you have than it does on the actual structure of the trade. The actual structure of the trade, the most important part is to be positioned properly. What I mean by this is if you're going to be on the opposite side of flow, like if you're a person who just likes to be on the contrary side of flow, like me, I'm much more comfortable selling when everybody's buying when everybody's selling, right? Then it's very important to establish a position near the highs and the lows. So first 5 minutes you have a reaction. If it's anywhere within 10 minutes, 10 pips of the lows, I want to be in here. I'll be in here properly established. Now, if you're trading with trend, right, and you have this very negative news and you think there's more continuation, then it's the exact opposite. What you want to do is establish your position as close as possible to the original price level before the news hit, right? Before the news hit. So you're hoping that it rallies within 10 pips of the original level. So the original level was around 65.90. If it gets into 65.85, you're going to get short, and you're going to put a 20-point stop there, and then you look for more continuation, right? Going back to that actual live example of New Zealand. Where's my New Zealand thing? Let's take a look at New Zealand just one more time. So this was a big pop. It was 71.80, right? It popped all the way up to 72.20. You really, you couldn't have gotten it within 5 or 10 pips of the original value, but you could have said to yourself, you know what? I want to be long this position because I think it's a long-term positive. So if it gets to the round number, if it gets to the figure, I'm gonna be a buyer. And you could have been a buyer for a trend trade, to the upside. Either way, the most important part is it's not whether you want to fade the move or go with the move. It's where you enter, right? Trading is all about positioning. It's where you put your position in that really, really matters. So that's the second way of trading reactively that I think is just absolutely valuable. So our process is very straightforward. We look at clues ahead of time. We look at clues if we're going to be trading proactively. We establish a view, and then we check the technicals to make sure this is the critical thing. This is where I meant. I don't ever dismiss technicals, but I always use them as a secondary source to just find my points of resistance, points of play, and then that's it. That's our checkpoint: fundamentals, technical, sentiment, and we go in there. Now we do this every single day across a wide variety of trading techniques. I specialize primarily in day trades. My partner Kathy specializes primarily in sort of fundamental big trades. And together we collaborate on our swing trades, on our longer-term positioning. Here's how a day at BK looks like. 9 o'clock GMT, we trade what we call the European session trades. Then Kathy posts her trades all the way through. Now, for you guys, it's a little tough because obviously it's coming into your evening times, and sometimes when in overnight for Kathy's big trade ideas posted. Then we do a live webinar, which I'm going to be doing actually in a couple of hours with all my guys at BK. Then we have the UK session close at 1500 GMT. Now this, when it becomes daylight savings time, it becomes 1600 GMT. And then when you guys wake up, Kathy will come up with a lot of Asian session trades. And then throughout the day, I'm constantly trading what we call my boomer strategy, which is a strategy that we trade in our room all the time. Generally, I try to target 10 pips for my trades. Kathy tries to target around 30 pips for her day trades, And together, when we have the big swing trades, we try to target about 100 pips per trade, right? This is like a one trade per week that tries to target about 100 pips. And we also allow you to copy trade our service. If you want to just copy these automatically into your account, you can copy them as well for no fee. So one of the things that I wanted to tell you is that we're running a very, very nice promotion where we're discounting everything for anybody who is a Pepperstone customer. But that's not enough. Let me see if I can actually copy this to everybody, and you guys can go. I wonder if can I send? Maybe Fabian can send this for me because I can't seem to send the the message to everybody because I don't have the prerogative. But it's very simple. If you just go to BK Pepperstone, you'll be able to sign up. But just in the last minute, I decided I'm going to do something very special. Since you guys were very, very kind to come and hang out with me for an hour and just learn some of the key trading techniques that we use in our room, I am going to give you the EA that we trade, to every single trade we make. This is an all-around EA that we've custom manufactured. Actually, a guy who is an Australian who's in my room is the guy who wrote the whole EA. We've gone through 23 versions of it, and it's going to go to 24th version of it now, that is able to handle all of the rules that I just showed you automatically. We call it the Boomer EA, and it's usually costs $27. I'm going to anybody who comes in and signs up for a membership and just simply says Pepperstone on there, just as a reference point. Everybody's going to get this for free. So you guys can get the Boomer EA for free, and every upgrade on this EA for the rest of your life is totally free. There's no charge. So I hope you guys will enjoy it. I hope you guys get a chance to kind of day trade with us in the BK room. I'm going to leave myself now for any questions and see if anybody has any questions about the trading or about our room or anything else that's on your mind. So
okay, Boris, we've got a couple questions.
Okay.
Okay, what's the significance of key support and resistance levels when you're trading the news? Do they play a big part?
So, it's an interesting point. I pretty much ignore most support and resistance levels in the news because news effectively will very often break those levels, right? Break those levels. But if I'm targeting a certain amount of pipages, and that target is in front of a support and resistance level, I will respect it. So I guess my answer to the question is, I ignore it on entry, but I pay attention to it on exit, as far as where, because that could either exacerbate my risk or minimize it, depending on where the support resistance level is. Because the whole view of support resistance levels is they only act that way in a non-news environment, right? Think about this. Why does support and resistance exist? It exists because market players have no further information. So given all the available information, they pretty much think this is fair value where I'm going to sell, this is fair value where I'm going to buy, right? But once news comes in, you now have a reappraisal of information, right? Just, the most obvious example of this, the most obvious example of this is what we're seeing right now in cable. Let me just go back to cable because it's so crystal clear. Look at cable, right? For the last 3 or 4 days, you could have just made this argument that 2350 was hardcore resistance. Hardcore resistance, right? You bought at 2250, you sold 2350. It was obvious, right? Well, not so obvious anymore. Why is this no longer resistance? Because we have a fresh piece of news that completely changes the valuation of cable, right? And that allows us, that changes the whole support resistance issues of where you want to go, right? Now, why do I say, for example, just looking at cable, just on let's look at 30 days. Why do I look at 25 as a key resistance point? You see what I'm talking about? When I'm entering, I couldn't care less. When I'm exiting, I am very mindful of it. Why is this a big deal? Because this was when we broke down from the flash crash. Rather, not even when we broke down from the flash crash. This was the level where we couldn't break above after there was a flash crash, and the highs were 24.75, 24.75, right? So we know that in front of the 25s, there was a lot of selling at that point, right? So very likely it's going to stall around this level for right now. But is it ultimately a resistance point? No. As a matter of fact, if this news causes cable to just verticalize through 25, to me 25 becomes a support level, not a resistance level. It completely changes the whole structure of cable. See, this is how we incorporate the fundamentals with a technical background. We use technicals as a way to sort of gauge the broader distribution of where the buyers and sellers are, but of course we're using the fundamentals to figure out how they're going to change the psychology of the buyers and sellers. I hope that that's clear. Any other questions?
Thank you. The next one is, what's the best time frame to trade the news events on the charts? Would it be 1 minute? Would it be 30 minutes, 1 hour? What's your take?
No, I use a 5-minute chart. I mean, I use either a 1 minute or a 5-minute chart because remember, it's sort of the 5 minutes before, 5 minutes after. That's really what you're looking for as a reaction time. Today, this is a very unusual. I mean, this is a extraordinarily unusual piece of news because this is a piece, piece of news that could have meaningful impact far beyond just the 24 hours in a day. But so that. But I mean, I usually just always use either a 5 or a 10 minute or a 5 or 1 minute chart just to see the granularity. News has a shelf life of about an hour, hour and a half maximum. So you really want to be looking at a smaller time frames.
Thank you.
Okay.
Last one is, why is the risk to reward ratio negative with a stop of minus 17 pips and a target of positive 12?
Because we need to have high accuracy. I mean, there is no free lunch in trading. If you want to have high accuracy in your setups, you have to use a negative risk-reward ratio. Also, because the markets tend to be very, very choppy. If you use a 2-to-1 risk-reward ratio, your accuracy rate will be around 30%. It's very counterintuitive. Almost everybody misses this point when they start trading. But I was talking to, hang on a second. Hang on. I don't want to show this to you guys, but let me just see if I can pull up the data because I actually showed this to my friend Robbie Booker. I actually did this for fun, where I did a 3-to-1 ratio one way versus 1-to-3 ratio the other way in terms of the numbers. Sorry, I have to just scroll back through a lot of data here, but let me see if I got it. It was just astounding. I think it was like, yeah, here it is. Okay, this is perfect. Perfect. Okay, so this is great. So I ran the exact same strategy. I ran like what we call our session strategy, right? In one iteration, I risked 15 points, and I had a target of 5, which seemingly would be a horrendous risk-reward ratio, right? That batch of trades had 18 winners out of 21 for an 85% accuracy. In the exact same strategy, I did the exact opposite. I risked 5 points, and I targeted 15. And in that batch of trades, on the exact same trades, exact same strategy, only 5 winners, 21 losers for a 23% accuracy. The irony of the whole thing is that the high negative risk-reward ratio actually made 45 pips out of that trade cycle. The high reward, low risk strategy lost money. Okay, does that explain why we use negative risk reward ratios?
That's great, thank you. One more is, what's your take on the gold and silver trading with using the fundamental news?
Well, my opinion on those two instruments is less than useful. I don't trade them. We don't. We can only trade them in the future spaces in the U.S. I think gold. If Trump wins, gold is a buy, obviously, just on a fundamental basis. But honestly, I stick to FX. I stick to what I know. So I wouldn't want to hazard a guess because really, my opinion is less than useless on that subject. I'm not an expert. Any other questions, guys?
Okay, one last question. How does Financial Juice or the Squawk Box compare to the paid versions of news services?
I think they're just as good. I mean, they do. What do you really need from a Squawk Box? You just need them to tell you what the hell's going on, right? And if they tell you what's going on for free, why do you want to pay somebody to tell you what's going on for money? There is very little edge, especially remember. The edge that you are looking for, which is that microsecond edge, you really don't have. You don't have that edge because the algorithms have it. So to be super fast and super far ahead of the market, you're not going to be. All the algos are going to have all the information ahead of you. So to me, the much better edge is the reactive edge. The much better edge is to walk into the market after everybody has reacted, because that's where the high probability trades are. As I've showed you, that's where the money lies. And as we know, that's where the opportunities lies. So as a retail trader, I think we should compete on the playing field where we have the greatest chance of success, which is why instantaneous news feeds are not nearly as important as trying to figure out what happens after everybody makes the reaction. So what else did I want to show you? Just one other thing, guys. If you're interested, this is a quick. This is absolutely free for anybody. What is this? I put this over here. Yeah. Bit.ly.com BK election. BK election on election night, U.S. time. This is actually your morning time, so you guys will be around. Feel free to come and hang out with us. We're going to be trading for free all across the internet. It's an invite to anybody who wants to come in. If you guys are in Pepperstone, please come hang out with us. And if, as I said, if you guys want to just come hang out with us in the room, please join. This free EA is for right now. Like, if in 24 hours you join, I'm giving you the EA for free. If you're coming in later, then you got to pay like everybody else. But either way, this is the Pepperstone discount is $145. So just bit.ly. BK Pepperstone, and just sign up if you'd like to come hang out with us in the room and get much more detail about all the trading strategies that we do. Anything else, Fabian? Any other questions that anybody has?
Yeah, just one last one. As you mentioned before, some of the news events can cause a pretty fast-moving market. Is it safer to enter a hedge position instead?
The only problem with the hedge position is that you don't have you're really not making a trade. All you're doing is a hedge position is the same as no position, right? If you're both long and short, it's as though you're not in the market. So I know everybody loves to hedge, and hedging is this beautiful functionality that we don't have in the United States of America because it's against the law here. But just from an intellectual point of view, what's the value of your hedge? Ultimately, you're going to have to lift your hedge. When you lift your hedge, you're effectively making a directional bet. Whether you make a directional bet now or a directional bet later, that's all it does. The hedge just simply gives you the peace of mind not to have to make a decision. But ultimately, you get paid for making a decision, right? So all you're doing is just delaying making the decision, which is okay. I mean, that's fine. I think that's fine. But just understand what you're doing. It's not a strategy. All it is a delayal tactic. Does that make sense to everybody?
Yeah, thank you.
Okay. Super. So I hope you guys had fun. I hope you guys banked some pips off this pound. This was so much fun to hang out with you during this really momentous decision. I can't tell you how excited I am because I'm hoping that maybe the whole Brexit thing is going to get scuttled and the world will find its sanity back. You can tell which side of the fence I sit economically and politically. But But in either case, I hope you guys were able to position yourself into that trade nicely. And I hope you guys come join us in the room. We'd love to have you. We love Pepperstone. We love Pepperstone customers. We love the platform. As I said, if I was non-American, we'd be trading with you guys. But we're just constrained by laws over here. But for all of you guys who are trading with them, I hope you enjoyed. I mean, the Pepperstone Razor platform is just custom designed for our news trading service. That's what we love to do. Most of my customers, not even just in Australia, but everywhere else, love to use that platform. So I hope you guys do too. And if nothing else, come join us for the election night follies. That should be a lot of fun as the market gets crazy. Any final questions? Anything else on your mind? Any specific thoughts about trading? I will leave you just sort of with the very, very simple point that the bread and butter trade, the absolute highest probability trade that we love to do, is sell New Zealand, sell Australia news events, the kind of news events that we talked about 5 to 10 minutes after they occur. I'm sorry, not sell them. Sell the reaction. Sell the reaction. So in other words, if the reaction is negative, we buy it. If the reaction is positive, we sell it. Because the counter move is a very, very high probability trade. So if nothing else, I hope you guys can walk away with that particular little tidbit of trading knowledge, and you can put it to good use. And of course, our Boomer EA is custom designed to be able to take advantage of those times in the marketplace. So, like I said, if you guys join us now, I'm happy to give this to you for free, but only just for today. So that's it. I hope this was fun. Damien is going to obviously cut the video, send it to you. I will send you the PDF version, and then I guess you could send it to them as well, right? Would that be fine?
That would be fine.
Of the presentation? Sure. Okay, super. So we'll send you the PDF version of the presentation. Any questions that you have, always email us, contact@bkforex.com. I'll be happy to answer anything that you guys have on your mind. Any final questions? Any final thoughts? Anything on your mind?
That's it. Thanks, Boris.
Great, guys. Thank you so much. A lot of fun hanging out with you guys. You should do it again, and everybody hopefully will come join us for the U.S. election next week. I'll see you guys later.